Hello. So Alphabet actually reported earnings, and it looks like they had a narrow miss here on earnings and revenue for the second quarter. But the stock is up about 5%, and of course, we're going to examine the finer details here. You can take a look at our stock news module, pretty much talking about how Google stock is actually up after a revenue miss, really, and an earnings miss for the most part. But again, because it is narrow and worse things were expected, we are seeing a pretty much uptick in terms of the price of the stock. Again, about 5% higher. After hours 110 is what we're seeing right now. So let's take a look at what happened at the earnings report. Now, the company reported earnings per share of 1.21 versus 1.28. You will see here that this was a miss, of course. And in terms of revenue, about 69.69, a nice number, versus 69.9 expected. So it's still lower than expected, but very narrow miss. And again, amidst this climate where everything is going down, having a narrow miss is not that bad of a thing, and this is why we're seeing the company actually trading higher, it looks like. Now, the advertising revenue has been going down slightly, 7.34 billion versus 7.52 here. And the same thing goes with Google Cloud revenue, and traffic acquisition costs are still lower, so it means that the company is probably not spending that much in terms of getting new customers for the most part. Now, revenue growth slowed to 13% in the quarter from 62% a year earlier, so this is a pretty steep decline in revenue growth here, as you can understand. But a year ago, the company was growing at an insane pace. This is probably not going to be happening forever, of course. And so this is why we're seeing a little bit of a decline here. But overall, the company seems to still be doing very, very fine here. Now, currency fluctuations from a strengthening dollar, not 3.7% points of revenue growth, is what the CFO said. And it does make sense. The growth of the dollar has been insane lately, pretty much deeping, making all the other currencies in the world deep. And so this is a little bit of a dire picture in terms of the overall economies of the world, of course. But still, Google seems to be doing rather well. Now, interesting to see that advertising revenue increased just 12%, still increased though. I actually expected a potential decline here, as it's tough to get the sale, tougher at least to get the sale these days, because people are cutting down on costs. There are inflationary pressures, as you can see here, and so people tend to be a little bit more appreciative of the money that they have, and they cut down on some spending. They mostly spend on things that are needed, really. And so the most notable deceleration was in the YouTube division, where sales rose 5% after jumping 84% in the same period a year ago. So as you can understand, and that basically probably affects me, YouTube is actually not growing at the pace that they were growing a year ago. But again, this kind of decline in revenues overall is going to be expected for a company like Alphabet at this current environment. It's unavoidable, really. And of course, there's also heightened competition from TikTok in short form videos. Now, it's not the exact same thing like YouTube and TikTok. YouTube is mostly about groups of people. TikTok is mostly about like some sort of quick entertainment. So I wouldn't be too concerned about TikTok infiltrating in the kind of advertising that Google does, really. But it's still a little bit of a thorn for sure. Now, you will see here that Google's search and other revenue was 40 billion, up from 35.85. That's actually a pretty nice increase here, and the growth was boosted by travel and retail queries. Another interesting thing, especially travel here, it's something that I wouldn't expect, frankly. And revenue in Alphabet's other bet segment, like self-driving car, for example, rose by 1 million from 1 year. That's a very, very small part of their revenue, pretty much, as you'll see. And Google Cloud fell short of revenue expectations, lost almost $1 billion here during the quarter. Doesn't seem to be doing as much as you would expect, but is trying to take share, of course, from Amazon Web Services, AWS, Microsoft Azure. These are top players. It's tough for Google Cloud to grow that much, I'm assuming. And hopefully they're going to be doing better over the years. Now, its headcount, Alphabet that is, rose 21% over here to 175,000 employees. They had a quick 2-week freeze that they actually announced in terms of hiring pretty much last week or so, I believe. So yeah, this is gonna be a little bit of a freezing in terms of getting more employees for a little while. But going forward, is what they are saying. The very strong revenue performance last year continues to create tough comps that will weigh on year-on-year growth rates of advertising revenues for the remainder of the year. It looks like. Now, they didn't provide a revenue forecast, but analysts expect growth of for the year of 14%, which I'll take any day, really. 14% again for a company of this sort, a behemoth like Google, is pretty great. So, especially amidst this kind of climate of environment where we have inflationary pressures, a lot of issues with supply chains, and pretty much the overall economies of the world, I'll take it any day. So, this is pretty nice. And already, the shares have lost about a quarter of their value, which actually gave us an interesting entry point. At least for me, a few months back is when I bought Google. Okay, so let's take a little bit of a look at Google's financials. We have done that in the past, but we can take a little bit of a look since we have the opportunity of the earnings report from Google, and we are using our tool here, our trusted tool. And you will see that the P ratio of the company is sitting at 20. Price to free cash flow ratio also almost sitting at 20 here is fairly nice for a company of Google's caliber. I mean, it's different to be buying a company like a retailer at 20, and it's much different to be buying Google at 20 in terms of a PE, for example. It's a much different company, different margins, different story, different growth. So that really affects a decision based on the price to earnings ratio or price to free cash flow ratio. And the outstanding shares count has also been going down, and it will keep going down because the company has announced buybacks. Very solvent company, too little total liabilities, little debt here. You can see it also in the debt to equity ratio here. Great net income margins. I'm assuming they may get a little bit suppressed in the upcoming maybe year or two, maybe. But return on equity at 28% here. And look at this revenue growth, for example, pretty amazing. And net income growth, free cash flow growth for a company of this sort, which again is huge. The numbers here in terms of absolute numbers, 260 billion, it's absolutely insane. So a company of this sort trading at this valuation, I'll take any day. Of course, it's tremendous. And if we take a little bit of a look at the income statement, for example, of the company, you can kind of see it more clear here, more than doubling their revenue in the past 5 years. And take a look at the net income. This is insane, like 6 times more almost. It's absolutely amazing here for the growth of the company. In terms of the balance sheet of the company here, 152 billion to 251. It's almost twice as much as they had 5 years ago. So they are growing at a tremendous pace here, and they are still buying back shares. Remember that. Now the cash flow statement, you will see here, if you go down, that the free cash flow again tripling itself in about 5 years. So overall, the financials of the company have been absolutely tremendous here. It's a company that I would love to be in. They are printing cash. And the only question that I need to ask myself, is it a good time to invest in? And this is what we're going to be examining at the stock evaluation tool. But before we do that, let's take a look at what the insiders and senators are doing in terms of Google nowadays. Now, in terms of insiders, you will see some sales here, and the thing is, you may be wondering why so much red. But the thing is, if you take a look at the securities that these insiders owned in total, and the ones that they sold here, these are very small portions of their total portfolio. Take a look at these. These are almost like 1 or 2 shares, really. And some very small lots here in terms of the transacted securities, which doesn't really spike any fear, frankly. It's just getting some money from their compensation, really, just selling some stock, some units in order to get some compensation back. These are, of course, officers here, these are executives, so they are using some of their stock to get some of their compensation from the company. They are not selling that much though, so I would expect much more selling to happen here in terms of the absolute amounts of securities that they're being sold. It's just too little, so you may be seeing volume here in terms of the amounts that are being sold, in terms of the actual numbers of sales, but the actual transaction values are fairly low. And in terms of the senators here, there's actually not much action going on. You will see just one sale here in terms of a senator who sold just a small lot here. Before that, we had 4 purchases and like 2 sales here. So Scott Franklin here bought quite some, and you can kind of see it in more detail if you have access to the tool. And in case you are interested in getting access to the tool, you can find links in the description box below this video. You can become a patron and get full access to this tool that I'm using. And of course, we know of the split history of Google, which has just split it, has made a 20-to-1 split, really. And so if you had one stock, you now have one share, you now have 20. Really, if you have two, you now have 40, and so on. Now, the next thing that I'm gonna do is actually I'm gonna take a look at the stock evaluation tool. Is what I wanna see. And we have done that, of course, in the past. Now, the revenue growth that analysts were expecting, we saw that it's going to be 14%, which frankly I expected less, to tell you the truth. And I will go a little bit less. So we know that it's going to be 14. I'm going to put it in my medium one. So I'm going to go 14. And let's just say that they do a little bit better, 16. So since we have these analyst estimates right now, let's just use them and see what we're getting out of this one. Now, the net income margins of the company have been doing better and better. And it's actually surprising to see that being increased that nicely over the years. Now, they may be doing a little bit worse in the upcoming years, so I'm gonna go with something that is closer to the average. The average has been about 21% here, and so I will go maybe something like let's go. Let's actually start with 21 here, 23, and 25. I think that makes sense. Free cash flow margin, again, we're kind of being around the 100% territory, which makes a ton of sense. So I'm going to go 90, maybe 100 here, and 105, since we had a year with 106 here. And an annual return of 13% is what I typically want to be making out of my stock. And if we hit calculate here, you will see that for this kind of valuations here with a revenue growth of 12%, we could still wait a little bit for the company stock price to come down. But if we're talking about a 14%, which is the projected one, we're already there. We're still in the green. And remember, not every company is the same. A company like Google is a different story because of the growth, because of the tremendous net income margins, the tremendous return on equity, pretty much the amount of cash flow that the company generates, the stellar balance sheet. All these things matter. And so even if we are entering a period where we're going to have a little bit of uncertainty and stocks could go down potentially, a company of this sort is a very, very steady one to own. And of course, you want to be getting in that at as much cheaper price as possible. That goes without saying. But I feel like even at this current valuation, Google is actually pretty cheap for what it is. And so I'm definitely buying this one. Thank you for watching the video. Remember to leave a like and subscribe if you did enjoy this one, and I'll see you in the next one. Probably I'm gonna be making a video about Microsoft pretty shortly because they also had their earnings, and I'll see you in that video very, very soon. So see you soon, guys. Bye bye.